The Bank of Canada held interest rates this week. In my opinion, it was a mistake. They should have cut them. Yes, we did see inflation tick up in quarter 1, but it wasn't real inflation. If you actually look under the surface, a lot of it had to do with events that we had, such as US companies stockpiling goods before the tariffs came into effect, and then also the GST holiday that we had earlier this year. That's not sticky inflation, it's artificial. Meanwhile, our economy is showing signs of weakening. If we look at unemployment rose to 7%, and that's the third consecutive time in a row we've seen our unemployment rate increase. Delinquencies are rising across mortgages, auto loans, and on credit cards, and we're entering a new wave of renewals where a lot of households are going to be now facing higher rates while they're already stretched really thin. In Ontario, especially in the GTA, we are starting to see a lot more pressure on the real estate market. If we look at the number of new listings are up dramatically in Toronto. However, sales are softening. The average sale price has dropped 4%. And what we're starting to notice too is anything that's kind of over that $1.2 million range, it's got to be something very special to sell quickly. As economist David Rosenberg said, the Bank of Canada should have cut rates. The economy is slipping into a recession and they are behind the curve. This doesn't mean that it's time to panic, but it does mean that it's time to plan. For buyers, this is a really good opportunity. There's higher inventory on the market. You can go in, you can negotiate great terms. If you're upsizing, it's an excellent time to do it because the lower priced homes are performing better than the higher priced ones, and that gap has narrowed. If you're somebody who's looking to sell, if you're staying within the same market, it's all relative, and it's a very nice time to make a move. However, you have to make sure that when you're bringing your house to market, it's priced correctly, it shows its absolute best, and you've got really good marketing. The rate hold, it isn't a green light, it's also not a red light. I'd call it a yellow light. Proceed with strategy.